Okay, great. Let's get started. So thank you very much for joining our webinar this afternoon. My name is Hamish. I'm one of the consultants at Bevica. My job is essentially working with our customers to help implement the solution and working with them to enhance best practice and use the full functionality that's included within Bevica. Now, a tiny bit of housekeeping. We do have a chat box and a questions box, so please do feel free to add questions as they come up, and I'll set some time aside at the end of the webinar to run through any of those. But in our quick session today, essentially what we're going to be looking at is how you can really get a truer understanding of your margins while utilizing the distribution cost management functionality. That's an extension that we offer within Bevica. So to talk you through that, I'm going to be sharing my screen in a moment. As I said, if you have questions, please feel free to put them in the question and answers box, and I'll address them at the end. And we'll run through a bit of a whistle-stop tour of Bevica. Right. So for those of you who haven't seen Bevica before, this is Bevica. Bevica is an extension that we've built that sits within the Microsoft Business Central Dynamics platform. Within this is an industry-leading drinks enterprise resource planning solution, which means that not only do you have your operational infrastructure in there to manage your inventory and your warehousing and your sales order and purchase order processing, but you actually have a full comprehensive finance suite as well, and that's all included within the standard software. Now, as I mentioned, this is drink specific. So our background is drinks, our experience is in drinks, and we've used that wealth of experience to be able to tailor make this solution to accommodate the challenges and the hurdles that a lot of drinks businesses face, and to really help them grow and scale their operations. So just as a very quick rundown for those who haven't seen this is what your role center looks like. So when you log in, the first thing you'll notice is that familiarity. This does feel like a Microsoft product. Up the top here, we've got some key navigation. So this is where we're able to filter by department or function into more granular reporting and sort of process information. So we have things for finance, sales, purchasing, etc. At the top of my screen here, you also can see some KPIs. So this is where we've got some really basic figures, which are just crucial bits of information that you see when you log in. So immediately you see things like overdue sales invoice amounts, overdue purchase invoice amounts. I should mention I'm logged in as a finance user currently, so these reports, these figures that I see are catered to myself. However, if I was logged in as an operations user, there'd be a slight change in the reporting views that I see. I can see a number of tiles here. Tiles are essentially summaries of lists. They let us know what documents sit behind them. So for example, if I wanted to see all of my open sales order, there's a tile here that says sales orders and it says 370. With one click, I can pull up my open sales orders list. And right next to that, you can also see credit held. So again, this just shows when something needs your attention in the system, it is visual, it's striking. The idea being we want to show you something. So credit held is in red, meaning someone needs to look at that because there are some orders which can't be fulfilled as a result of the credit checks. Scrolling down the bottom, these are just some very, very standard dashboards. So we have a business performance dashboard here, which shows the top 5 customers by sales value. In the center, this is a list of accounts, and these accounts are actually pulled from your chart of accounts. So a lot of people will have their bank accounts here, they will have stock accounts, purchase accounts, and it just shows you value. So as I said, if I'm a finance user and I'm logging in, normally one of the first things I want to see is kind of what's the bank balance or like how are the accounts looking. And on the bottom right-hand side, this is actually a Power BI report. So Power BI is a data visualization tool. It comes and integrates really nicely within the Business Central environment, and it extracts your data. And we have a suite of reports that have been designed to help show really kind of integral business metrics, just to give you more visibility over your data in quite a visual and interactive way. And so these reports can be scattered all throughout the solution, just to provide your users with essential information. So what we're talking about today is looking at your margins. And so typically when we work with customers, when we work with clients, and they're sort of wanting to look at the margins that they're reporting on, kind of the two ways of looking at this, or the two directions of movement, typically is inbound stock and then stock outbound to customers. Both of these transactions on either side bear cost. They incur costs, and whether it's freight, insurance, RH&D, courier charges, picking charges. There are, a multitude of charges that can be associated with these transactions. And when you're reporting on sales orders, at that point, it can be quite tricky to actually see what is the true cost of fulfilling this sales order, because you might be making 35–40% GP at a pure product level on a sales order when you look at kind of what you purchased the product for versus what you've sold it. But when you factor in those additional costs, that's when you can actually see costs starting to creep. And if you're unaware of those costs and you're not tracking them appropriately, it can be really surprising when you come to look at your management accounts and see that you're actually not performing as well as you thought you were, or potentially you've priced products incorrectly for the costs that are actually associated with them. So to kind of circumvent this, we've developed an extension within Bevica called the Distribution Cost Management tool. And with this, we are able to look at enhanced charges, and we're able to roll out some other nice functionality as well. So if we talk about additional charges to begin with, on the concept of a sales order, if we look at a sales order, there is a cost to fulfill goods. And so what I have here on the screen is actually my sales order screen. So this shows all of my sales orders just for a bit of context. If I was to go in and add a sort of sales order here, let's just put one down for a Sado Bar and Grill. And let's just say they're going to be ordering some Barolo, and we're going to order 10 cases. Now, what the system is acknowledging is that we have a product that we're wanting to sell to a customer. In the unit price excluding VAT column, this is the price I'm going to charge the customer. Now, when I raised my purchase order a while back and I received the goods, I recorded the cost of those goods when they came in. So when I post this transaction, what essentially is going to happen is I'm going to be looking at my cost of my goods, the price that I'm selling to my customer, and the system will calculate my cash and GP. So where this is obviously clear is that we have a really accurate recorded landing cost from what was put on our purchase order. We do know what the price is because it was set on our customer price file, so the price automatically populates on the sales order, and that's standard for transactions. Where this becomes limiting, as I mentioned, is if you have costs, for example, to fulfill 10 cases of this stock to the customer, and you think we have to pay a courier £35 to deliver this, you want to be able to record that cost against this transaction itself. And that way, when you're actually reporting on it and you're looking at the margin that you've made for this particular sale, we can factor those costs in. So using the additional charge module, we can select an item charge. Now, if I open up the item charges here, these are all set up within the system. People will often sort of have miscellaneous charges that, for every business it's different, but these are set up in the system to begin with. I have one here for a courier charge against a sales order. So if I say I've got my courier charge here and it was £35. Now, if I had a vendor set up in the system, so if, for example, if I was using a courier like DHL or APC or EHD, for example, someone like that, I'd actually be able to assign a vendor to that cost. And that becomes important when we're reconciling that charge in future, because when you're issued with an invoice from the courier, you're able to actually reconcile it against this specific transaction. But for the purpose of the demo, I won't put a vendor in there. But also it's worth pointing out, there is a currency option. So if it's a charge that's paid to, a body who the charge is made in euros or something like that, you're able to accommodate multi-currency charges as well. On this, there is also a document line number. So with this charge, there is a potential to say, I want this cost to only apply to a single line on this document. So if you had 10 items on your sales order and you said, maybe we pay a large format handling fee, for example, when you're selling magnums or Jeroboams or something like that, what you're able to do is you're able to apply a specific charge to a specific bottle, which means when you're reporting on the sales order level and you're looking at each individual line, you can have that cost reflected against an individual product to see the true margin for that product's fulfillment. So I've added my courier charge here for £35 to my order. Now, when I click out of this, what you can see on the additional charges box over here on the right-hand side, that cost has been added to the document. It's worth pointing out, nothing has changed to the price to the customer. So we haven't added any value or anything like that. If we wanted to charge a customer for delivery, we can definitely add a line item. We can add a charge for them to cover the cost. But at this point, we're just saying this is a cost that we're incurring, and we want to be able to record that in our system. So I have my courier charge here. I've got my £35 that I'm saying this is an additional cost here. Now, if I go to post this sales order, it's just posting now, it's going to give me the option to view the invoice. So what I'll do is I'll open the invoice for you to have a look at so that you can see what's been passed on to the customer. And then we can have a look at the entries. So we want to open the posted invoice. So here we can see just the pure financial transactions that occur with the customer. So if I look at the entries that exist against this customer and against this transaction for that customer, there is nothing here in the value entries that says to me there's a charge or anything like that. What we want to do though is when you actually confirm that actual cost, it actually gets moved to the sales shipment side of things. So if I look at our posted sales shipments, and I look at the most recent one. So this is the sales shipment side. So this is the logistical side of the transaction. If we look at the find entries here, and we look at the value entries here, so we can see duty, and we can also see our courier charges here. So we can see some courier charges that have been assigned to the entries. If I also show you on the item ledgers, we have our transaction here where we can see that was the 60 bottles, the 10 6-packs that we filled. The unit cost is the price we charge the customer. And we can see here the unit price is the cost of the goods. Now, if I scroll over, essentially what we can see is if we got this cost amount non-inventoriable. So within this, when I was doing a bit of testing before I added in an additional courier charge, that we can see here the courier charges that have been assigned to this transaction itself. So at an item ledger entry level, we can see that cost. So theoretically, if we take the cost amount actual and we add the cost amount non-inventoriable together and we divide that by the quantity of bottles sold, we have a unit price of £12.59. Now, with this, that £12.59 reflects the charge that was incurred as part of that process. And so that means that, as we say, when we're reporting, we can see our cash margin and we can see our margin percent as a result of the transaction. Now, because there were the additional charges, we've obviously not made money on this transaction, so we would need to address that. But that's how it works against a sales order. Now, similarly, when we look at a purchase order document, we have the same functionality. Oh, excuse me. We have the same functionality to be able to add charges against purchase orders. So if I open up a purchase document here and I say it's going to Bell and we are buying some mayonnaise, 10 cases, we have our costs that we're paying to the supplier down here, our direct unit cost. Now, if I receded that into the system, 58.68 is what would be recorded as my cost per 6-pack in the system, and that would be the way that the value of the stock is received. On my additional charges here against purchasing, let's just say, for example, the purchase freight to bring in some cases was £100. Similarly, the additional charges will be added to the purchase order. Now, the difference, I think, with purchase orders and sales orders is as you're receiving stock, this cost of freight, and you could have freight insurance, RHD, however you want to categorize the orders, all of these costs will be proportionally distributed across the contents of the purchase order. And I can show you the options in a moment for how you'd be able to distribute those costs. But the idea is that when you receive those costs, what is going to be recorded to your stock value account is actually not 58.68. It'll be the 58.68 plus the case's proportion of the additional charges as well. So you're inflating your stock account slightly to accommodate those costs so that when you actually process your sales orders, like we just saw before, you'll be able to see that inflated cost, which will also work out, again, a truer sense of your margin. Now, if I add a little vendor order number in here, and then we post this, just realized I put 10 cases and made it £100, so it's made it quite expensive in terms of shipping. So we have a posted invoice, which is for the supplier. And purchase. There's the purchase receipts. Line entries. Value entry. So here. So we can see the cost here being assigned to that value entry of £100, knowing that that's been deliberately applied against that specific purchase receipt. If I take you back to the item ledger, we have our cost of our goods, and we've got it included in cost amount actual. Now, the reason this is moved between non-inventoriable and actual is because we've recorded that cost at the point of receipt. Now, with this, there may be some finance users who think about the idea of, we're potentially receiving and invoicing purchase orders at different times. What if the costs we put in on a receipt are different? So there is actually a way within this to be able to revalue those charges. So an item charge revaluation journal, what that will actually allow us to do is find a specific document. We can find an entry that we're looking for, and we're able to change the cost of that entry. So for example, if we said that the cost was £100 when we received the purchase order, it got posted, and then we actually get the invoice and realize, it's actually only £60. We're able to go in and find that specific £100 entry, and we're able to revalue that specific entry, which again will change the value of that stock as it sits within the system. So within all of this, the idea is that you do have accuracy across the postings, but you also have the ability to correct anything if there are ever any sort of administrative errors where costs may flex and may vary. Now, appreciate I've shown you at a document level how you can apply these transactions. So within the system, we actually have the ability, to work through an automated default charge. So what we can do, and typically we see this with items, vendors, and customers, but you are able to find specific customers, and you are able to say, for this specific customer, I know that to fulfill to them, I always have to pay a certain amount per 9-litre case. And so what you're able to do in here is you're able to say, we want to set a customer, let's put the Pickle Pub, and I can say, I always have a courier charge for the Pickle Pub. It's always £15. And here you're able to say, if it's like £15 per document, so for each sales order, am I charged a standard £15 charge? Is it done on a basis of the volume that I'm sending, the equivalent 9-litre cases, or is it by the quantity-based bottle? So you're able to actually set these charges up so that they automatically apply to documents that are created for those customers. So you can see here, I did have an additional charge set up for £10 for 9-litre cases for my first sales order, which is why there was that additional charge in there. But as I mentioned, this is something we see people using for items, vendors, and customers. Vendors, it will typically be sort of you can use your pallet shipping rates. You can use your sort of so you've got any sort of documentation charges or anything like that. Customers, typically it is things like your delivery charges. If you have to pay any specific, if you're doing like a pallet rate down to Cornwall, for example, you're able to put that fixed pallet rate. And for items themselves, if it's a large format, you can put that additional charge. So anytime that item is added to a sales order, the additional charge is calculated in the background and added to the sale to confirm that margin. Now, these additional charges and sales delivery charges, it's worth pointing out that these are kind of the blankets. So when you apply them to the document specifically, as I showed you earlier, what we do is we say we want to make the assignment by either quantity, volume, weight, or value. So you have the option to say, if it's insurance, for example, and it's a fixed insurance rate across the purchase order, you could say, I want to apportion the cost of the insurance by the value of the product. So the most expensive products should carry the majority of the cost of the value of the insurance. And it can also be calculated on a few different metrics there. And then we also have sales delivery charge units, which is set in 9-litre equivalent cases. Now, if your business is at a point where you're utilizing shipping agent functionality, so you're potentially nominating on a sales order or a purchase order what the shipping agent used for each delivery is, you're able to set up quite complex metrics that actually will calculate the shipping charges and apply them to the orders. We have customers who deliver UK-wide who have a matrix set up to accommodate postcodes. So all of the postcodes, as they vary on specific sales orders, will have the appropriate cost charged to that order. So they're able to see when they're looking at their margins, the actual sort of sales order level, with correct margins at that point. So these are your additional charges, and this is kind of your way of being able to do that. We've talked through this idea as well about being able to manually populate them on sales orders as they come up, and we've also discussed that you're able to revalue things if there are any changes within the system. So typically, what we would see is a flow-on effect, because it's great to be able to have this reporting. This is where something like Power BI as a data visualization tool comes into play. So being able to use these points of information, so being able to record them against those item charges, you're able to pull some really comprehensive reporting for your item charges. So we can do Power BI reports that will show you, your sort of total sales, your accurate margin, factoring all the costs, but then you'd be able to break it down to a granular level and say, okay, what are we paying for our H&D, for example, or what are our costs that we're seeing for insurance, and you're able to look at things from that perspective. And we do have customers who sort of, when it comes to the setting up the automated charges, they're looking at the cost of importing, and they're understanding, how that's proportioned across all of the countries that they're buying from and importing from, and they're able to add charges, which will never be perfect, because the idea is that it's not reconciled at an invoice level, but it's kind of trying to factor in those charges and knowing there are some regions we import from which are more expensive, as a result of, as a portion of the business that we're doing. So that's a really quick rundown through the distribution cost management functionality. And really, really simply, I've shown you it on a sales order, I've shown you it on a purchase order. We've worked through how it can be automated and applied to documents, and also how we're able to revalue any of the charges that are applied to the transactions. Now, in a minute, I've got the question bar open. So if anyone has questions, please do feel free to put out please feel free to put questions in the question box. If we have a few minutes left, that I'm more than happy to run through. And I will also say that with the ERP that we're working with Bevica, the ability to have that consolidated sort of centralized source of information. So knowing that your ops team are going to be sort of processing transactions in the same system that your finance team are going to be reconciling transactions in, it gives you a lot of great visibility. And a lot of customers, when they're moving to Bevica, they are moving from disjointed systems. So they might be working on Xero or Sage or something like that, and they'll have some form of order management inventory solution. And the reconciliation between the two, knowing that you're receiving goods at one price, but in Xero, you're recording all of these separate costs. The ability to kind of pull that information all together and sort of reconcile in the same place, again, just provides so much efficiency. And also, it's real-time data. You have people transacting, you can see the transactions as they flow through. As soon as someone receives an invoice, it can be corrected. And especially, being able to automate a lot of this, so not having to actually rely on a user to go back and manually put in any information to record additional charges that are incurred throughout the supply chain process. Okay. Right. No questions have come through at this point, but like I said, if there are any questions, please feel free to put them in the questions box, as I'm more than happy to answer any of the questions that we've gone through today. I appreciate this is very brief, but these lunch and learn sessions are very much to give you a flavor of how you could be using Bevica to improve your operational infrastructure. And of course, if you have any questions or if you think of a question later, by all means, please do reach out, as I'm more than happy to jump on a call and sort of chat you through this specifically, or just some more functionality that exists within Bevica as standard. Great. Okay. No worries. Well, look, as there are no questions, I'm happy to wrap things up here and I'll allow people to have a little bit of time back to their day. But thank you very much for joining today's Lunch and Learn webinar. I hope you've taken something away. And as I said, I'm here if you want to have a chat or if you'd like to get some more information, please do feel free to reach out. And of course, we'll be more than happy to have a conversation and help.